Hello, good evening everyone. Welcome again to my weekly market outlook. I am back with this week for August week 4. We are going to take a look on what is going on in the market, how is SP 500 has been moving for the last few weeks, and what happened last week and what we can actually expect for this coming week. So again, welcome everyone to my weekly market outlook. And let's just go ahead and take a look at our chart on what has taken place. Again and again, last week was pretty much a very quiet week. It could be easily seen in our chart. But just before we go on further to look at what has happened and what's so on, let's just take a look what was my call for last week. Again, last week I did not do any video, but then I posted it in my Facebook page. So if y'all have not been following me in my Facebook page yet, please go ahead and like my page. It's called Senthil Kumar. You can see over here. So at times when there's nothing much to be said about the market, I won't actually create a video, but I actually post a quick summary in my Facebook page. So that's exactly what I did for last week. And so what I basically posted is what you could see over here. I mentioned that for last week, I believe the market will record another intraday historical high before closing slightly lower. And the two reasons why I call so is because the previous week, we had a weak candlestick, which is a hanging man. That shows that the weakness is in the market and the market can't move much higher. And the second factor why I call that the market will only move slightly lower is because there will be a lot of this factor, which is options expiry week. So there's a lot of short covering action. So that could help to hold the market up still. So what exactly happened last week? Let's just go back to our SPX chart and take a look on what exactly took place. So over here, you could see an SPX weekly chart. And this is what exactly took place for last week. So if you could see here, that's exactly what took place. We had a market which recorded 2193, which was in a new historical high. And then the market started moving lower. So eventually it closed slightly lower. It's very light. So instead of saying slightly lower, we could actually say the market did not move at all. The market just closed flat. So we hit another historical high. We could see how many weeks we have been closing at historical high, starting from over here just after the post-Brexit rally. Then we had the first week where we closed higher, and then the second week, third week, fourth week, fifth week, sixth and seventh. Continuously we have been recording at least an intraday high for the week. Now, where does this lead us to? Where does this bring us to right now? Based on what has happened last week, we could see the market barely moved. All right, there was not many buyers. The market tried to push higher, which is up to 2193. Then it was followed up by a lot of buyers. So this shows sellers has started coming in, but not in volume yet. The buyers are still there, but the sellers has started coming in, but the volume is just not there yet. So now let's just go ahead and look at our support resistance, the trend in the market, and let's see what we can expect for this coming week in my weekly market outlook. So as for this week, before we go on further, let's just take a look at this weekly chart and just take a look at the support and resistance. The blue line is obviously the support, and the red line is what usually I say as the resistance. But over here, let's just get rid of this 2160 first, and let's just keep to 2175. 2175 is no more resistant right now, but it looks more like a support right now. But remember, this is a very light support. So now that is changed. So if we are looking at this and weekly chart, roughly what we are seeing right now, that the light support is roughly around 2175 in SP 500 chart, which is SPX, and then followed by 2130. That could be a strong support because that was our previous historical high, and right now it may turn out to be a resistant turn support, but it's yet to be tested, and I strongly believe it's going to be tested very soon, which I'll explain shortly. Looking at this, it is not really that clear on what is the support and resistance just merely based on the weekly chart. Because of how the market has been moving sideways without much movement, it will be a better approach for us to go into the daily chart and look at our support and resistance. It could give a much better indication on where our support and resistance is. This is our daily chart for an SPX. And if we are going to look at it, let me just zoom in further. So if you are seeing over here, if you're just taking a look at over here, you can see right now that the support is definitely at 2175. So why do I say so? Look at this. We had SPX moving lower over here to 2175, followed by a bounce back. Then it came down again to roughly around 2175, and then it bounced back. And then again, it went back down to 2175, it bounced back. And for yesterday on Monday, it again went down to 2175 before the buyers came in and pushed back the market up. This is why I say 2175 is a very strong support on a daily chart right now. But overall, it is still a light support. So apart from 2175, we could see that we have this kind of support roughly over here, because the price has moved in few times over in this range. So let me just change the color first, just to make it easier for us to see it. So I'm just going to change this to blue, and then we can go ahead looking at it. If you could see over here, the price moved again, touched around 2160, touch, and each time it touched, it bounced. So that is what our support is right now. Sorry, that was our support earlier. So 2160 followed by 2175. If for the market to break lower, it has to break 2175, and for any significant breakdown, it has to break below 2160 as well. I do believe if it breaks 2175, it can easily break 2160 as well. So that is pretty much what is our support. And obviously we are not looking at any resistance right now because we are at a historical high. But taking a look at what is going on right now, we can take a psychological number, which is 2200 as our resistance. Market often likes to look at round numbers. That could be a psychology support or a resistance number. So in this case, we are looking at 2200 as our psychology round number as our resistance. So that is pretty much our support resistance. And obviously in terms of trend, we are pretty much clear that it's an uptrend. What can we expect for this coming week? I'm going to go back to this weekly chart, because often I always like to refer to weekly chart in terms of before I call for my weekly market outlook. So again and again, we had 2 weeks of hanging man. So this was last week. This is actually for Monday, which was yesterday. I'm doing my recording today on a Tuesday. So that is why we already have the Monday candle over here. So if we are taking a look at what happened last week, this is just another hanging man. Again and again, week after week, actually for 4 weeks continuously, we have been seeing this hanging man candlestick. Hanging man candlestick, I have explained a few times earlier in my videos that it is a weak candlestick. It shows that the market is about to turn around. That means there's lack of buyers in the market and sellers have started coming in. The weakness is there. The candlestick has shown some weakness. So for this coming week, I'm calling for the market to move lower. I'm not going to call for a crash, but I'm calling for the market to move lower. Probably I'm looking around moving to 2160, but I can't say for sure where it's going to move down. But it could move down to 2160, and if it at all breaks 2160, it could move all the way down to 2130. Why am I calling for the market to move lower? It is simple. It's because of all the weakness that we are seeing here right now. Week in, week out, we had so many weakness candles. So that could also lead for the market to move lower starting from this week. The first thing that has to happen for the market to break lower is it has to break 2175. Then followed by 2160, and finally to 2130. So that is what we could see for this week. My market outlook for this week is for the bears to take over from the bull. It may not be a very strong sell-off, but still we could see a market moving slightly lower. Now, to further support my call for the market to move lower for this week, you can also take a look at what is happening at the MACD histogram. So it continues to move lower and lower despite market moving higher. You can see this histogram over here is higher compared to this histogram over here. So thus I'm saying that as the market moves higher, the MACD is moving lower. This is a perfect divergence that is taking place right now in SP 500 chart. So those are the reasons what I'm saying that the market may move lower. And as well as if we are going to look at the moving averages, this is our 20 weeks moving averages. And it is pretty much nearing to our support, which is roughly around 2130. So that could also lead to the fact that the market could actually move down and test our support, our horizontal support, which is 2130, which may be backed by the 20 days moving average as well. So we may see the market move down, come over here to 2130, which is our usual horizontal support, and 20 days moving average would have moved into confluence along with 2130 support, and then the market may move higher from here. But that is just a projection. We may not know yet what may actually take place, but that also further support or my call for this week that the market will come down for starting from this week, because we had so many weeks of market moving higher. It is just time, it's just around the corner for the sellers to start coming in volume and start pushing the market lower. So that is for SPX weekly chart. Okay, just to summarize, I'm calling for the market to move lower. It is supported by the fact that we had almost a 4 weeks continuous weeks of hanging man candlestick, and then we have the MACD moving lower as well. We have a divergence over there in MACD. Now, just to go around, I'm going to show you all about Dow Jones Industrial Average chart as well. This is a weekly chart of a Dow Jones Industrial Average, and if you are taking a look at it, it is almost the same picture as what SPX is showing us right now. The market has been moving flat, it is moving sideways, and then we have our historical high support roughly around 18171. That is our previous high, which may has turned support right now, 18171. And as for now, the historical high is at 18668.44, and we can see week after week there are so many weak candlesticks around here. Now, this is what I'm saying right now, that both SPX, even Dow Jones Industrial Average are showing sign of strong weakness. And again, you can look at this MACD histogram, it is going down as well. So this is another divergence which has been shown in Dow Jones Industrial Average. So SPX and Dow Jones Industrial Average are showing the same story, same things based on their charts. Now, moving on further, let me just show slightly about US dollar. What we have been seeing right now is the market has moved down, moved up, moved down, and it's tried moving higher, but it failed after there is a strong sell-off here right now and continued to move down. So that was exactly what has taken place right now. The US dollar has started moving down, and what is the level to watch out is 92, or roughly we could say 93. Any break below 93 could be disastrous for US dollar, because there is no any further support for it until roughly around 80 to 83. So US dollar has started moving down. It's probably a good news for Malaysians, but it also could be a bad news for countries who are trying to devalue their currency against US dollar. All right, it shows that they have to continue printing more money to continue devaluing their currency against US dollar. It is all about import and export process. Now, so we already knew that the US dollar is slightly on the downtrend right now, and it could also help the SPX to move higher. It may, but also to think about the other side. When US dollar gets weak, that means the buying power of US citizens goes lower. That could also be a bad news for SPX or SP500 or equity market in general. So we have talked about SPX, we have talked about Dow Jones Industrial Average, we have just taken a brief overview about US dollar. I do think that US dollar will continue to move lower to 93. We have seen all these factors. One factor that I would like to highlight further is this particular factor as well. If you are looking at how overvalued SP500 is right now, or equity market in general, you could take a look at what I'm showing here right now, which is a performance chart, a comparison chart between the earnings by all the top 500 companies in SP500 comparatively with the SP500 index. The red line over here shows the SPX earnings, and you could see year in, year out, it is actually going down. But if you look at the SPX index, it actually has moved to historical high. That's how diverged the stock price or the equity price in general compared to the actual earnings by SP500 companies. It shows how overvalued these companies are right now. So again, it could serve as an early warning that the market is pretty overvalued and it's high time for it to start coming down. But do remember one small fact, that for market to come down, it is very highly unlikely for the market to come down for this year. Why? Especially till November, because we have the US election coming in November. No government will actually ever allow the stock price or the equity market in general to drop just before its election. They pretty much control it. The central banks will control it. So we won't be seeing much sell-off till then. We may have small sell-off, but that could not be any huge sell-off yet. Any huge sell-off is going to be only in 2017. For this year, because it's an election year, it is going to be pretty controlled till then. All right, guys. So that is what I would like to highlight for today. We have seen the SPX, we have seen the Dow Jones, we have seen about US dollar and such. And also tomorrow, I'll be doing something special. I'm going to show to you all on how I just made roughly around 15% return from oil price. I'm going to show how I actually spotted oil price and at what price I went in and when I went out and how did I actually do it. For those who are interested to know on how I actually do it, do comment below in this video, because once I have uploaded into my YouTube, I will actually tag those who are interested. Okay, so I will be sharing it in my Facebook page as well. So for those who are interested to know on how I actually made roughly around 15% return in oil price recently, wait until tomorrow and I will upload the whole secret on what I actually did in order to make such profit. All right, so till then, as usual, stay informed, stay invested. There are a lot of opportunities in the market, so keep learning, never stop learning. Signing off for this August week 4. Take care and I'll see you all again very soon. Thank you very much.